Thank you for joining us today to discuss the Intellect Design Arena Limited financial results for the first quarter of the fiscal year 2025-26, ending 30th June 2025. The investor presentation and the press release has been sent to you and is also available on our website. Our leadership team is present on the call to discuss the results. We have with us today Mr. Arun Jain, Chairman and Managing Director, Mr. Manish Makan, CEO of Global Wholesale Banking. Then we have Mr. Rajesh Saxena, CEO of Consumer Banking, Mr. Banesh Prabhu, CEO of Intellect AI, and Ms. Vasudha Subramaniam, CFO. Besides, some other senior members of the Intellect management team are also present in the call. Now I hand it over to Ms. Vasudha to take you through the result. This will be followed by the comments from Mr. Arun Jain, and then we will start with a Q&A session, where your question will be replied by the management team. Once the Q&A starts, you can ask a question by clicking on raise your hand, and we will unmute you, and everybody will be able to listen. Once safe harbor, I would like to remind you that anything which we say, which refers to our outlook for the future, is a forward-looking statement. This must be read in conjunction with the risk the company faces. With this, I request Vasudha to give her briefing. Over to you, Vasudha.
Thank you, Praveen. Good evening, everyone. A very warm welcome to all of you. I'm delighted to walk you through the financial and strategic performance of our company for the first quarter of the financial year 2025-26. This quarter marks yet another important milestone in our journey of becoming the most comprehensive, composable, and intelligent financial technology provider to forward-looking institutions across the globe. On the financial performance, we had a strong start to the fiscal year. In Q1, we delivered a total income of 734 crore, representing a growth of 18% year-on-year. EBITDA stood at 176 crore, showing a 28% year-on-year growth. Profit after tax was 94 crore, a solid 27% increase year-on-year. Collections stood at 586 crore. Our cash and cash equivalents remained robust at 976 crore, giving us the confidence to continue investing in growth and innovation. Our license-linked revenues comprising license platform and AMC revenue stood at 389 crore for the quarter. That's more than 50% of our overall revenue, creating a predictable and recurring engine. And our ARR, annual recurring revenue, now stands at 1,041 crore. This is a strong indicator of how our business is maturing towards long-term, committed, high-quality engagements. Now, on the deal wins and go-lives, we won 17 new deals and went live with 15 digital transformations in Q1. Let me highlight 3 strategic wins in the US with 2 global banks, marking the entry of eMAC.ai into the US market. A Tier 1 Canadian multinational bank has chosen both eMAC.ai co-banking and payments for the US expansion. This engagement spans their corporate and investment banking operations and sets the stage for future expansions in Europe and Asia. This win is significant not just in size, but in strategic depth. It reinforces our relevance for Tier 1 banks operating in complex global environments. In parallel, a San Francisco-based global financial services firm operating across 35 countries selected eMAC.ai liquidity management. This solution will give them real-time visibility, control, and compliance over global liquidity positions, a vital capability in today's volatile market. These are part of a deep growing funnel now valued at 11,300 crore with over 9,200 crore already in active opportunities. Let me shift gears to Purple Fabric, our open business impact AI platform. In just 60 days since launch, Purple Fabric has conducted over 50 bootcamps, engaged 5,000 plus participants through our business impact AI masterclasses, sparked deep strategic interest among global banks and insurers. More importantly, this platform is aligned to enterprise-wide AI deployments, not mere experiments. The market is clearly signaling that it is ready for AI that is auditable, traceable, governable, and most importantly, impactful. We are building a strong pipeline of engagements that we expect to convert into high-impact AI transformations in the quarters ahead. Let me talk about the continued validation by the global analysts. The growing adoption of eMACH.ai is also reflected in the industry analyst community. Gartner continues to rate us highly in its critical capabilities for retail core banking systems. Chartis has positioned our credit lending operations as leaders in 5 different quadrants. Celent has identified our digital experience platform, DEP, as a functionality standout in its retail and SME digital banking platform across APAC, EMEA, and North America. These recognitions affirm that eMACH.ai is not just a visionary platform, it is a proven execution engine. On the leadership capital, to support our global scale-up, we have made some key leadership additions. Dave Thomas has joined as EVP and Business Head, Credit Union and Small Market Financial Institutions. He brings 3 decades of experience from Central One, ATB, and Accenture, and will lead Canadian Credit Union's transition to our digital experience platform. John Turner has joined as a president and business head for Purple Fabric. Rajesh Makija has been instrumental in shaping eMACH.ai cloud architecture and was pivotal in launching Purple Fabric, has been appointed Chief Marketing Officer to lead enterprise-wide marketing. Ishmael has come on board as SVP and Country Manager for South Africa. And Connor has joined as Chief Marketing Officer, Wholesale Banking. Vivek Patil has joined us as EVP and Chief Growth Officer for Intellect Consumer Banking. He will lead large transformation deals in India and adjacent markets. These appointments reflect our conviction to not just build world-class products, but to support them with global talent, strong governance, and high-touch customer engagements. To summarize, Q1 has delivered strong growth across all key metrics: top line, margins, profitability, and pipeline progression. eMACH.ai continues to gain traction with tier 1 banks and analysts alike. Purple Fabric is ushering in a new era of auditable, governed, and business-impacted focused AI adoption. We are backed by a growing base of referenceable clients and a leadership team built for global scale. As we move into the rest of the financial year 2026, we are confident of building on this momentum. We are operating from a position of strength with conviction in our strategy, confidence in our products, and clarity in our execution. Thank you again for your time, your trust, and your continued partnership in our growth journey. Thank you.
And thank you, Vasudha, for taking us through the brief. The presentation is sent to all of you. As an investor, you must have gone through the presentation deck on all the numbers. So to me, the results are in line with what we are presenting to you. Around, you wanted 15% growth. I think we are in line with that we are growing in spite of IT industry slowing down. And we have a good pipeline of 12,000 crore, close to 11,000 crore pipeline. So that's a big validation of the strategy of eMACH.ai. US getting 3 deals in a single quarter of digital transformation on eMACH.ai core is significant validation, because that is a core concern we had and core strategy we had to enter into US market with our eMACH core payments system and core payment liquidity system. So it's a very, very significant for us that in single quarter we get all the 3 major product, core, liquidity, and payments, getting an entry. So it means what we have invested the money in last 6 quarters is paying off one by one. Initially UK, then Canada, then US. Before that it was Germany and Hungary. So eMACH in advanced market is going in line with our expectation. In AI Purple Fabric business, similar kind of deals are there in US and UK, which is continuing our agenda to build on the top of Purple Fabric. Obviously, as I mentioned in my comment, Purple Fabric in last 6 months is keeping me extremely busy and excited. It's very rare in the organization history that we come out with a technology which is compared to the best in class in AI, where there's a tailwind, where everybody wants to acquire, and there are two kind of AI businesses are there, just to make you aware. There's a AI which is data lifecycle AI, which is built on data and knowledge, which is done by OpenAI or Perplexity or DeepSeek. They are classified by the analyst into data lifecycle AI. Then there's a second class of AI, which is application lifecycle AI. That's where application becomes a primary pivot around which you build AI, where it translates enterprise to deliver business result. Purple Fabric is classified into application lifecycle AI. There are three players as of now in leading quadrant. First is Palantir, which all of you are aware of. Second is C3. And third, which is Purple Fabric. So we done an independent analyst study on Purple Fabric, which is putting us on that bracket. That is the one part of validation of Purple Fabric. We launched Purple Fabric in Financial Times on 12th of May, and then followed by next 26th of May with the Economic Times, with Enterprise GPT as a with the Enterprise Knowledge Garden as a basic value proposition with that 4 tech stacks. It was surprised to see that even traditional way of newspaper ad has delivered us more than 3,000 registration on the Economic Times ad. And there are more than 2,500 unique companies who have participated in this journey. It is keeping all of us on our toes. I think we are doing one boot camp per day. Almost 50 boot camps happen in less, and sometimes there are 2 or 3 boot camps, one in London, one in Middle East, one in India. So the pipeline is growing significantly well. Within 60 days, we could able to look at it, the annual pipeline close to 800 crore in just 60 days of working. So this is a lead pipeline which need to convert into opportunity pipeline, and from opportunity to closure pipeline. But that's the one index of us to measure that out of 400 leads which we have generated in just 60 days is highest by any other product in last so many years, that 60 days could have generated this many leads. So Purple Fabric is extremely differentiated product. It's a disruptive product and market disruptive product. And with the open business impact AI platform, we are disrupting and simplifying. And one of the important feedback which is there from the customer who are using it, it's simple to use, while Palantir is cumbersome to use. So that's where the feedback we are receiving. It's early days. We will look at it that we'll be investing 100 crore. And this 100 crore out of 100 crore, 10 crore was invested in last quarter. So the profitability which is there as of now, 94 crore if you add. So it's another 10 crore investment which has gone to Purple Fabric. Next 3 quarters, we'll be investing close to 120 crore, increasing from 30 crore in next coming quarter, between 20 to 30 crore in coming quarter. And then each quarter going by an incremental amount. So that's how total number may move of the investment from 100 crore to 130 crore. And we are managing the EBITDA margins between 20 to 25%, that band what we are guiding from quite some time, that sometime it can go to 25%, sometime it comes down to 21% based on the specific license deals or specific market scenario. So that's the beauty of it, that all the AI investment is done within the same balance sheet without taking any other money. So this is like a bootstrap AI model which is happening in this company. First time where otherwise anybody in the world is looking minimum of 150 million to 200 million, 1,000 crore to 2,000 crore investment, which is going to be there. So our research team has done phenomenally good job in understanding what the enterprise needs are and able to respond to all the companies which have already invested in AI, and they're working from last 2 years. And when we are going and talking to them, whether they are working on Vertex, they are working on Palantir, they are able to, Banesh or Deepak or Hitesh are able to answer every question which they have on the table and what doubts they have on the table for enterprise implementation. And that's the beauty of holistic planning. From last year to this year, we have, before the launch, we tested out all the market objection upfront, and then created a market-leading messaging to go forward on this particular launch at a global level. So we are, on one side, we are excited to move forward. Every day is a very, very busy day, keeping all of us busy. On second front, Purple Fabric is helping us out to get a more lead in eMAG.ai, because in Purple Fabric, I can consume Purple Fabric as an API on my eMAG.ai. So in my eMAG.ai, whether I'm talking about core banking, I'm talking about lending, I'm talking about wealth, I'm talking about custody or capital market, or I'm talking about payments, I'm talking about liquidity, I'm talking about trade finance or trade operation or supply chain finance. In all these areas, we have built up digital experts and enhanced the capacity of existing products, which is now AI native products in a market. So in banking industry, these are the first time we are launching AI native banking products, which is consuming AI at the right place, because Purple Fabric gives them the ability to consume at the API level. So that's value, the complete eMAG.ai platform, which we launched in February, where AI was initial start. In last 2 years, now AI becomes a front leading conversation with a customer, that when they are looking for trading application, we are not saying you just buy out the trading application for system of records or system of engagement. You can take complete trade operation where we can play 20-20 game with you, 20% help you in increasing your revenue on customer side, 20% help you in decreasing your operational cost using Purple Fabric and trade platform, or a payment platform, or a core platform, or a wealth platform. So that's the promise we are looking at this point of time. So I'm willing to take as many questions as possible on the strategy and the financial numbers. I think most of you are aware and familiar. So I would love to have the questions which are related to strategy, then related to just tactical financial question, which you can keep one-to-one with the Vasudha willing to respond, whether on email or any other. So this time of 1 hour we can spend to make you understand where are we in the journey. If you have a question to Manish, Rajesh, Banesh, all three of you are here, 4 of us are here to respond to business question. So you utilize our time effectively. It will be in an interest to you to utilize our time effectively over here. Financial numbers are available. Yeah. Yeah, Praveen.
Thanks, Arun. Now the forum is open for Q&A. In case you want to ask a question, please click on raise your hand. I repeat, please click on raise your hand, and we'll unmute you, and everybody will be able to listen in. So first we have Mr. Rahul Jain. Mr. Rahul Jain from Daulat Capital. Rahul, please unmute yourself.
Yeah, hi. Hope my line is okay.
Yeah, please go ahead.
Yeah, thanks for the color that you shared around the product. Just had a couple of questions. Firstly, the funnel that we talked about in terms of Purple Fabric part, and if you could see that how typically this should culminate into business for us over a period of time. What are the top use cases that people are actually looking us on this thing? So first of all, that, and probably I'll have a follow-up.
Yeah, Banesh, would you like to answer?
Yeah. So, thanks, Rahul. I think we've been, as you know, working, and you've been seeing from regular results, Purple Fabric deals that we are continuously closing out in the US on the insurance side. We've got several leads now. As of this point of time, we've already moved forward the large numbers that Arun mentioned. We started analyzing, we reached out to all of them. We've had good response. We've got already 87 people who have already responded to us, where we are fixing continuous boot camps on. And also, we are pretty advanced stage discussion with several tier ones in the UK. So to answer your question, we are moving forward with the pipeline opportunity that is significantly come after the launch of Purple Fabric, in continuation to our existing business that is already making good momentum on Purple Fabric.
So, Manish, are you trying to say that bulk of the interests are coming from the insurance
No,
side, or it's yeah? So, key
I think
top three,
it's
four area, if
yeah. So
that.
it's well spread out. We have 20. We have 39 in Europe. We have 16 in the US, and also a lot of interest in India. There are 20 of them. These are advanced stage discussions. These are where we've already moved them from interest into leads, and many of them are already in opportunities. There are already 21 in opportunities right now that are pretty advanced level discussions going on. So to answer your question, it is not only insurance, it's all of banking, it's wealth, it's several areas, including a lot of operations reimagination, a lot of compliance and regulatory interest. We actually had an event on compliance and regulatory sort of events in the UK. It was attended by over 50 people. Actually, it was very popular. So I think I wouldn't say it's insurance only by far. Insurance has got a lot more momentum because we had started a lot of AI on it earlier, and it was well embedded with our products. As Arun said, a lot of this is getting attention because it's being embedded with our products and in a way in which Purple Fabric can coexist with eMAC, which is what it is. When we say eMAC.ai, it's eMAC and .ai. The .ai is Purple Fabric embedded with our eMAC suite, and that makes us uniquely positioned to the change that's taking place in the market on all of the products. All the products are looking for AI to embed itself in it. So I think fundamentally that's the interest we are seeing, which is quite unique from everybody else.
Interesting. As Arunji mentioned about scaling up the budget on marketing from 100 crore or to 130 crore, or moving to 30 crore kind of a run rate. Is there, I don't want to get into an outlook kind of a question, but more importantly, if you could gauge, since we're seeing this kind of a scale up on spend, so is it safer to assume the monetization scale up should also start later part of the year meaningfully for us to raising the spend criteria for us on marketing?
Yeah. So I think, Rahul, just so first of all, you understand that opportunities are there in reimagination customer, which is enterprise GPT. Then enterprise products, which is all the relationship managers, the how you design the product, compare the product with enterprise knowledge garden. Then you have enterprise operations, reimagine operations, which is completely operation, whether it's a customer onboarding operation, loan origination operation, trade operations. So we are having opportunities in that area, and compliance area, Banish said. So the 4 reimagination, business impact AI, all have a list of opportunities. Obviously, 130 crore is a number we are looking for incremental investment. We are looking around AI should generate close to 200 crore revenue by end of the year, cumulatively, from all the sectors where we are having insurance, we are having APX, CPX, which is a area, we have wealth as an area, we have a GRC as an area, and we have a new line of business which is coming up over here.
Yeah, thanks for that input. So, of course, we have seen how expansive the product has been in terms of leveraging the data garden. Does that also open up some kind of a consulting opportunity, or we would like to play it through product only, or it would be consulting plus product?
Manish, would you answer the consulting approach you are taking now?
No, thanks, Arun. No, we extending out consulting where we're looking at business impact created, and actually we're looking at target operating models and efficiency, operational efficiencies, what AI can provide. We onboarding number of senior folks next week. I'll wait till then, but we'll have shortly an announcement on the consulting side.
Including industry consulting, not just AI consulting, but industry consulting.
Appreciate it. And last one from my side. It's a numerical, I'm afraid, but uh, so the platform revenue, if we see, has grown significantly in this quarter. If we could share the organic part and the CI part, and is there any seasonality to the CI run rate, if we could understand that? Thank you.
Some portion came from Credit One, so this revenue has gone up because of Credit One. So Credit One was expected to grow, so that's the reason mainly for that. It's sustainable.
So what you are essentially saying is the current run rate is what we should take as a base, and there's not much seasonality from that point of view. Whatever we grow is will grow from this base.
That's right.
Thank you so much.
Thank you, Rahul. Thanks for the question. Next, we have Mr. Sushovan Naik from Anand Rathi Securities. Sushovan, please unmute yourself. Sushovan, you are there?
Yeah, is my voice audible?
Yeah, please go on.
Yeah, thank you. Thank you for the opportunity. Just a quick question, two questions. One is on the working capital. This is for Vasudha ma'am. Just wanted to understand what exactly is the GEM receivable contribution, and you have a significant non-current receivables of almost 200 crores, which was there in Q4. If you could throw some light on that. That was one. And the other was what exactly has contributed to the significant change in the currency mix? These were my two questions versus last quarter.
So I believe you would have picked up this non-current receivables from the annual report, perhaps. So that is nothing but the contractually not due cases. So as per the accounting principles, we are supposed to reflect the contractually not due receivables under the non-current receivables. So that's what it is. And the other question that you asked is on the GEM. Generally, we do not report the customer-wise receivables anywhere, and so that's anyway. It's quite a significant number, and that number is also reducing gradually, is what we would say. And there are plans to liquidate that completely, and that's one of the reasons, like for the increasing DSO. And you would see good improvements in the quarters to come.
I'm sorry, just the reason I asked this question is because in this presentation, I think you have just mentioned DSOs including GM and without GM. So that was the basic reason why I just asked the question. So
yes. So we would like to specifically highlight that the higher DSO is on account of GEM receivables included in that, and that's why we wanted to separate it out and show it. And in addition to that, there are other global macro reasons as to why we could not liquidate quickly, and there are some delays in the collections, and so which anyway our account management team is working very hard to collect it at the earliest possible. The other reason is there are many projects which are running on a milestone basis. So as soon as we complete the milestone is what we can raise the invoice to the customer and get it collected. So there are multiple reasons for the DSO.
Sure, thank you. And on the change in the currency mix, other than the C1 acquisition, is there something else? Because UK has significantly reduced and US has significantly increased from a currency mix standpoint.
There is a significant increase in perhaps the CAD, and that is the reason you are seeing some, the consequential impact in UK and US. Otherwise, whatever we've been generating for, GBP and USD, it's all the same in quantum, absolute numbers.
Okay, because what I see is 29% of UK of GBP has become 14% now, while USD 33% has become 45% now.
And the CAD would have increased significantly.
Okay. The CAD.
Okay.
The CAD is from 6 to 13, right? Yeah.
CAD is separately shown as 13% here.
Yeah. Yeah.
Okay.
Thanks, Sushovan.
Yeah.
Then next we have
Some
Mr.
contracts are
Srinivas.
denominated in dollar, but they are operating from different countries. So that makes the 45% USD. It's not a US business. It's a USD denominated business.
Understood. Thank you.
Thanks, Sushovan. Next we have Mr. Keshav Sureka. Mr. Keshav Sureka from Nivesha.
Yeah, so thanks for the opportunity. And as I can see that you have added 5 new logos in India. So from May presentation, there were top 9 banks, and now I can see that there are 14 of them. So if you could talk about those deals, like what kind of deals that you have won from India, and subsequently, like in future, like are we expecting any more deals to come from India, and any major deals that is going to happen in this geography?
Okay.
I think
in India deal, Ramnan is the right person to tell you, but these 5 deals are in the space, few deals are in the space of DTC, digital commerce, in the retail area and the commerce area. They are not all banking deals, which is reported from India. So these 5 deals have 2 or 3 deals are in banking and 2 or 3 deals are in commerce area.
Additionally, Arun, we were showing top 10, now we're showing top 15. We're showing how the width of our coverage across these markets is growing.
Okay. Yeah, top 14 out of 15. No? So that's a coverage which is installed. Okay. So Manish, you want to highlight it?
Yeah. You will see we were showing top 10 banks out of each of these markets as we've gone deep. Now we're looking at top 15, top 20, top 30. So we're expanding those space and showing you how deep we are entrenched in this market. It's about now growing these accounts and growing deep in them.
So, like, how do you see Indian market as a growth, like, to your business?
The Indian market is a very active market, and we are participating now in eMAG.ai as the Indian market. And with Purple Fabric, it's a very, very potent market.
Okay, thank you.
Thanks, Keshav. Next, we have Mr. Amar Bhakt from Oman Investment. Amar,
hi.
please unmute yourself.
Am I audible?
Yeah, please go on.
Yes. See, these 2 new products, which has been now fully enforced and ready to provide the incremental revenue for the company. Just trying to understand this revenue model. Will it be coming at the time of implementation itself, or there will be outcome-based revenue modeling, or it is after implementation there will be some AMC related revenue as well? How the revenue life cycle is with this 2 Purple Fabric as well as this eMAG.ai? How it is going to provide the revenue in one stream or different stream of revenue?
Manish, you would like to take it up?
Yeah, Arun, sure. Now, so Purple Fabric, let's start with Purple Fabric. It's a mix of initial revenue, small implementation, long tail as you scale, minimum commitment on certain volumes, and then business impact base. So this will bring in that trigger of a lot of variable. On eMAG.ai also, we're moving to a lot more variable revenue. And the consulting piece, which we are looking at launching, this will be of business impact created, how we can help a bank move from point A to point B on their revenues, on their costs. And that's where we're building out.
I'll just add a little more texture to the deals on both Purple Fabric. I think the customers normally are paying in different ways. Some of them, they're all subscription driven. Some of them are paying for the platform itself. Some of them are paying because that platform is bringing them safe. So most of them, we have a minimum subscription amount. For most of our Purple Fabric implementations, we have a minimum subscription amount they pay, which is the cost of us operating, running, and licensing our platform to them. The balance is then driven on outcome related of improving their either cost reductions or doing greater volumes on the platform. And therefore, some of them we charge by AI sort of volumes or agents, and some others we charge the whole platform. And wherever it is embedded into our products, we also charge similarly for the usage of that of the AI element of that license.
Okay, so if my understanding is correct, that means there's a part of the revenue which is kind of an annuity based. That means once I have a customer who take my product, the part of the revenue, either it is AMC or license based or the platform based, it will keep on continue till the customer is using, and probably part of it is a one-time expenditure at the time of implementation itself. And now you are also adding that there is something depending on the output based. So if our customer is able to achieve certain efficiency level out of using our product, there will be kind of a profit sharing or some kind of a fixed kind of an things will be getting by the company. I'm just trying to understand how longevity of this, if I get a customer today, how long I will be able to monetize for that particular customer.
So the subscription deals that we do range from 3 to 5 years. And they are, like you said, an annuity with a minimum volume, which grows as the volume grows. So there is a volume pricing. There is a separate implementation cost. Very often for certain projects, we do pilots, and there's normally a charge on the pilots. And then when we implement, we start with implementing the subscription, which is normally runs, like I said, for 3 to 5 years thereafter. And on top of it, there are several change requests that keep coming on upgrading the platform along those 3 to 5 years.
Good. So it's an annual contract. So let me just say the A1 cost is a pilot cost. A2 revenue is a implementation. A3 revenue is a subscription. Subscription based on percentage of, let's say, 30 basis point on the insurance premium paid, or per transaction basis, $12 per transaction or $99 per work packet produced, like per complaint resolution. Those are my transaction-based pricing. This is my A3 pricing, which is based on subscription or transaction. Third is my platform licensing, which is on annualized basis, which is also subscription-based licensing, which is the A4 licensing, which is based on number of cores my AI platform will be used. So number of cores, the way Oracle sells a number of core-based license, we have a similar policy of number of cores for platform-based outsourcing. So there are 4 different models of pricing. Since you are first time, I think, in Intellect, so I'll tell you there's a license pricing, which is a 5th model of pricing, and long-term license with the AMC. AMC is a 6th revenue stream. So these are the 6 different type of revenue streams in the company.
So if you implement product to one particular company, all those 6 streams will be activated over a period of time. So as and when we are adding the new customer to our new platform for this will compound over a period of time.
That's right. That's the value of the business like us. It may not be all the 6 for each customer. There'll be 3 for one customer, 2 for one customer. So that will vary, but it's a compounding. Compounding will happen. All the profit gets compounded.
And
that's why we have 18% revenue growth and 27% profit growth. So that's the important point, that companies coming to that lever where profit growth is higher than the revenue growth. So it's not a linear model.
Okay, and then in that particular model itself, there is a kind of an operating leverage is also built on, because as the product gets matured, the expenditure towards the product will not be as bigger compared to the revenue generating capacity of this particular product. So there is a compounding from that side. There's a compounding from the margin side as well.
Exactly. And that's what I think the value of the product companies are.
Okay. Just a second, and probably the last one, I will not take time. Just to understand the second part of it, is there a lumpiness in this kind of a business as well? That means in some quarter, suddenly there is an revenue built up, or in some certain quarter, because what I understanding, there's a kind of an consistency and a longevity of the product is quite high. But if I look at just quarter on quarter, I can see as a huge lumpiness in the revenue things. How it's happening?
It's happening because this product business, each license can be as high as $7 million. Now, $7 million license happens extra in particular quarter or not happening in particular quarter can give the lumpiness to the business. So on LTM basis is a good way for you as an investor to look LTM as a metrics for looking at it rather than a quarterly numbers.
Okay. And if I may allow the last one, please. In respect of this US as a market, I can see your main still US, and normally for the IT companies, US is a very big market. So far, Intellect is able to manage the maximum amount of revenue outside the US market. If I consider the US dollar denomination is a separate thing, but the business coming from the US is not that big compared to other IT companies. Now, we all know that's a huge market for a product like yours. So how, as a company, we're approaching to build that particular pie into our business? Because probably the margin there comparatively better what we understood from other IT product-related companies.
There are not too many product companies from India who is getting revenue from US as a market. Intellect will be still better than that. Margins are almost equal in US, Canada, Europe are similar nature. We are seeing the margin in UK and Europe is still better than US margins from that perspective. We have approached our strategy to go to Europe first, Canada next, and US next. That is our strategy roadmap items. So now this quarter we are announcing this financial year opened with the 3 deals in US. So now we'll be expanding US portfolio.
Thank you very much. I may be rejoining the queue. Thank you.
Thanks, Amar. Next, we have Mr. Mihir Manohar from Kamlin Asset Management. Mihir?
Hi, thanks for giving the opportunity and congratulations on good set of numbers. Sir, wanted to understand on Palantir, C3 and Purple Fabric. You mentioned that these are the 3 enterprise grade AIs. Any color or any feedback from clients, from industry analysts as to how is the competitive positioning placed of Purple Fabric versus Palantir and C3, and some color around as to in which areas who is strong and how will the things eventually pan out?
Beautiful question for understanding the market. Palantir is a company which started in 2005. So it's a 20-year-old company in AI space. It started from government of US and for commerce. So their major revenue come from government. And after 2018, they started moving out of government and start looking at the commercial sector. And they are using their old platform Foundry to support it. So it means they have a legacy, large Foundry platform, which is built on AI technologies available in 2010, 2012. Intellect has started investing into AI in 2016. C3 also investing around the same time. But we launched Purple Fabric as a platform only in 2025 after understanding what the pain of the implementation of AI. When you look at it, 4 elements which are differentiating AI in Intellect is enterprise knowledge garden is a first value proposition, which Intellect is the first time trademarked that along with data lake, you need enterprise knowledge garden, because moat of enterprise is a knowledge which resides in enterprise, and we have a technology to vectorize that knowledge in a garden and nurture the garden so that customer can use data from data lake and knowledge from garden. And this will make expertise for the organization. So this is very, very unique, which is not provided by C3 and Palantir. Second is, we don't talk about agents. We believe the business impact can only happen from the experts. Agent can solve the smaller problem, like an executive can solve, like call center problem they can solve. But expert, if you want to look at trade finance or wealth, you need experts there to solve the problem. So we have an agent orchestration system with a Socrates dialogue built into it, which creates immense value in digital expert methodology. Most of the companies in the world, both of the C3 are agentic. They announce more than agents only. We believe it's a business of experts, which is different. The third differentiation is we allow, it's an open technology. We allow any LLM to be used. We believe LLM costs are coming down. We should not lock down with the particular LLM. So we provide our customers the ability to benchmark LLM, select appropriately. And this is not given by any of the mic players right now. So these are the three core differentiation besides the enterprise governance, which all three of us are giving. Enterprise governance, entitlements, all three of us are giving. So enterprise governance, we are maybe equal, but on an EKG, digital expert and LLM, we are differentiated.
I think just to add to that, Arun, the talking to clients in Europe, and now we have a few large banks, I think the orchestration of the flow through EKG, through the digital workforce, and to set up a digital workforce, which is really multiple agents, multiple digital experts, I think the ability to do that easily and govern, because the clients who come to us are finding they cannot scale. And some of them are using the competition we're talking about, and they would like to scale. And I think the governance part of managing multiple workforces, I think we are better positioned in some sense, and we're also more flexible and easy to consume those services compared to their models. So that's the feedback we're getting, and we're obviously learning along the way here.
Sure, understood. So is there any more color around as to people are looking to replace or change their C3 and Palantir side of offerings to our side of offerings?
I think there are different people are coming with. Sorry, go ahead.
I'm saying it's just coexistence here. We are not replacing Palantir right now. I think we are too young a player to fight that battle. It's a $300 billion company, Palantir. Yeah. So we will be just, even if you take a 10% market share, it will be good for us.
Understood, sure. Second question was the investment 100 to 130 crores. So the 30 crores will be incremental, right? Which will be having a hit to the P&L in FY26.
All of them will be hit to the P&L in marketing. We cannot capitalize any of this investment, but we still manage the margins to the level of what we are looking between 20 to 25% margin. We will still manage within that margin in spite of the investments. But 130 crore is a hardcore investment.
Understood, sure. And just last question was on the DSO. I mean, on a QOQ as well as YY basis, even excluding GEM, there is a good jump in DSO. So how should we see this normalizing happening, and why this jump has been there?
It keep on fluctuating. Last quarter was very good. We could be able to collect a lot of money. This quarter is bad. So this quarter on quarter, this is a transactional items, which when the project goes live, suddenly the large money comes in. It's a milestone based payments. So I think that now you've seen the company from last 3 years. We should not be too much worried about DSOs.
Understood, sure. Yeah, that's it from my side.
Thanks, Mihir. Thanks for the question. Then next we have Mr. Rohit Balakrishnan from iThought PMS. Rohit, unmute yourself and ask the question. Rohit, are you there?
Hello.
Hello, Rohit?
Yes, sir. Am I audible here?
Yeah. Please go on.
Yeah, good evening, everybody. Sir, thank you for the opportunity. Sir, a few questions. So one was the US Destiny deals that we won, one in Canada, one in US. So if you can share some more color in terms of who were competing with, and I mean, how long was the engagement? And in terms of this, would you feel that this is sort of a very important inflection point for you to get into get more deals in the US? If you can share that first, and then I have two more questions.
Manish?
No, thank you. No, very good question. I think it's the strength of our technology, eMAG.ai architecture, what Arun's been talking about. We clearly beat number of the existing players fair and square. You go down deep into the architecture, the purity of architecture just stands up on itself. And then the strength of the wholesale banking, our industry aligned solutions, and our payments platform, which is again being rated by all analysts now in the leaders class. So all of that is getting demonstrated. You had the who's who of all the key co-banking, payments, and liquidity players in each of these wins. So this is a good start for us. Liquidity, we are market leaders. Payments also, we now amongst the top two most times. And the power of our co-banking, what we have demonstrated in Europe, the strength of that is now very evident as we break through in US.
So if I can just add, Manish, I think from a core banking perspective, for us to get a tier one client to get the corporate DDA deal in US is a great achievement, because from a US perspective, regulatory requirements are very steep, especially on the DDA part, which has state requirements and Fed requirements. And without a reference site, we were able to win this deal. This just goes and shows the power of our eMAG.ai architecture, as well as our relationships that we have built over the last many years with some of these tier one clients.
Are you disclosing the size of the deals, sir, in terms of what is the size? Is it like $30-40 million or less than that?
The Canadian deal is very large. I'm not getting into numbers. This is the phase one. There's multi phases of it, and this will be very, very large. I just stay at that right.
Okay. So the second question was again, so if I've been following the company for a long time and been invested for around 5 years now. So I think generally I understand, of course, that I mean, we have been investing much ahead of the curve for a lot of things. And I think this, whether it is eMAG.ai or Purple Fabric, is a culmination of that. So while you said, Arun sir, that this year also you will be investing around 130 crore, of which 10 has been done. But just maybe looking beyond FY26, our understanding, and I think you have also mentioned it many times, that generally margins can be even upwards of 25% or could be even higher than that. So when do you see Intellect sort of getting into that trajectory? I'm not asking this quarter, next quarter. I'm just trying to understand when, as we outsiders, should start expecting that to happen. Again, not specific quarter or any, but just maybe would like to hear from you, like how are you viewing this? Because of course these are big opportunities. So I understand what you all are trying to do, not looking at immediate quarters, but just would love to understand from you.
Yeah, so I think the way we design the business is to keep the growth peg around 20%. We achieve 15%, we achieve to 14%, but we design the business for 20% growth year on year. So that's the first principle. Second principle is we are 20% is we are pegging the business for from design perspective, but economic condition may be different, customer condition may be different. But margin will be close to 30% growth. So if I look at it, 1:1.5 is a difference between revenue growth and a profit growth as a number. If you're looking from a 3-year perspective window, achieving 4,000 crore revenue and 1,000 crore margin is what we are looking to design the company for. So from your investment pegging, PBT of 1,000 crore, and 4,000 crore as a top line number in 3 years' time is very much possible. It's not a guidance, but this is what we are striving for.
Got it. That is helpful. And sir, just two small bits. So of the pipeline that you mentioned, 9,000, which is active, would you be able to broadly share what would be US of that? That was one. And second, sir, we have consolidated C1 acquisition. Has that also led to some kind of a margin drag in this quarter, and in this financial year also, will that be there?
Yeah, so the acquisition has obviously on its own, it's profitable, but not as much profitable as over other businesses. So that has a percentage margin dip maybe there from this perspective. But as an acquisition, it has given a huge amount of acceleration in Canadian market. Rajesh can brief you about this.
Yeah. So I think, sorry, should I?
Yeah.
Yeah. So I think we announced this acquisition in March, and along with this acquisition, let me just summarize for the investors. We got about 170 new customers, 140 people came along with this, and I think our first quarter, our results have been better than what we expected. And both from a culture perspective, from a sales perspective, and from a relationship perspective, our business is growing. And as we get into a totally new segment of these 150 odd credit unions, we are seeing a lot of new opportunities which are opening up. We are looking at not only, so this acquisition is from a digital engagement platform perspective, but we are now seeing opportunities coming up in core banking, opportunities coming up in lending, opportunities coming up in commercial banking and payments. So I think we are seeing this opportunity, this C1 acquisition as a good, it's still early days, but as a good acquisition to really significantly improve our footsteps in Canadian market and get that client base and the cross-sell and the upsell opportunities that we are seeing. Those, it is still early days, are good opportunities that we are seeing. So from that perspective, it's a very good acquisition.
And sorry, just small clarification on this. So when you are now looking at C1, do you look at them separately in terms of as an operation, and or are you like fully consolidating in terms? I mean, numbers is one thing, but just from your own lens, the reason why I'm asking is as you take over, as you sort of integrate, how do you see the margins of that business, or you look at everything together and
Rohit, we look at merger means merger. It's a culture merger. It's a people merger. It's a thinking merger, and we don't separate that.
Yeah, and we have done this significantly over the last quarter, Rohit. So it's now of one Intellect operations.
And it's a strategic intent of, it's given us access to 150 plus banks in the market, where we have plenty of other cross-sell opportunities. It also gives us a competence of running a large-scale cloud SaaS business, which we can extend out. So it has a lot of strategic decisions behind why we went into this acquisition, other than it brought us a certain revenue. It's the scale which we will get in the market. In Canada, we are becoming a dominant force.
Sure, Manish. So did this acquisition also help in clinching the deal that you did?
No, it adds up to the Canadians start feeling very comfortable. Our size of operation, our intent is, it's like we calling this is as one of our 3 home markets. India is the home market, the UK is a home market, Canada is now becoming that home market, and the intent is to scale each one of these to 100 million business in near future. So it's on the right path.
Yeah, if I can just add to that, Manish, I think another important piece that we got is about 140 odd Canadian employees who came along with this deal. And I think that would significantly help us as we go along in implementing these deals that we are winning. So it's like a Canadian team has now got that critical mass right? That we should be able to implement better, and that gives the confidence to the clients as they look at us for large deals.
Got it. Thank you very much, and all the very best.
Thank you. Yeah.
Thanks, Rohit. Next, we have Aditya Trivedi from Nippon Capital. Aditya?
Yeah.
Any more?
Yeah. So the question I have is, is there a roadmap for expanding Purple Fabric's adoption beyond BFSI into sectors, say like manufacturing or retail, where we could see AI-driven workflow automation and procurement optimization also critical, or is Purple Fabric's architecture and components restricted to BFSI? What I'm trying to understand is there could there be an expansion in TAM for Purple Fabric?
Yes, Aditya. We are expanding already to procurement and e-commerce solutions, DTC business that is already there. Besides that, we are looking some partners in other sectors to expand into pharma sector or a retail sector. So we are looking partners in that area.
And we have some pipeline in the non-BFSI we're already working on.
Okay, and as of now, what are the top 3 AI-driven business impact use cases being deployed using Purple Fabric?
So
more than 3. And just we have answered this question earlier, so it's the same area which we are talking about. So we have just only 5 minutes. We are running time, so it's if you have some other question.
No, that's it from my end. Thank you so much.
Thank you.
Arun, should we take another 2-3 questions and then?
So how many are waiting?
Maybe around 4.
Just take all the 4 and let's close it out.
Okay. Next we have Jyoti Singh from Arihant Capital. Jyoti Singh from Arihant Capital.
Yeah, thank you for the opportunity, sir. So I just wanted to understand, you discuss about the Canada thing. So what's our expectation to have a growth in that area after Capital One acquisition? And also another thing that on the license link revenue, that our expectation 60% over the next 2 to 3 years. So if you can update on that side, how it is moving, and then new direct to corporate platform like GPX, CPX, and APX, how are they expected to contribute to growth by 28-29?
Let's not look at independently. Canadian market will grow. Manish has mentioned it's a home market, like $100 million market in next few years. Similarly, APX, GPX, we cannot quantify individually for each market. So they are early start business. So the way we look at our strategy of Intellect, Design Arena, because the Arena, first GTB expanded the market share, then GCB expanded the market share, now AI is expanding the market share. DTC is in a incubation stage. So that will take another 3 years for contributing substantially to the Intellect. So it takes 5 years for the incubation to start generating a big number. So to sustain the product company revenue year on year and to create a pipeline, you need those kind of investment upfront.
Thank you, sir.
Thanks, Jyoti. Next, we have Srinivasu K from TIA. Mr. Srinivasu K.
Hi, sir. Am I audible?
Yeah.
Please go on.
Thanks for the opportunity, sir. Congratulations for the solid set of Q1 numbers. My question is, with the new AI laws coming that you said regulatory is very tight, how Purple Fabric is guaranteeing the governance and explainability in those markets? So are you pursuing any certifications to accelerate this?
There is no certification available, but we have a full traceability and auditability, and that's why we have won the client in Europe. In Europe, there is the largest wealth bank is using our Purple Fabric platform, and they have certified their own risk department has done it. So there is no formal risk department worldwide to say this is traceable. It's about the company to do their risk department to do it. But we have all the ethical traceability, dialoguing, questioning, all are recorded for ensuring that the responses of AI is, and we tell the AI agent tells whether the accuracy is 92%, 98%, 97%. So we have built up very, very solid enterprise governance module into it.
And to add to it, the digital experts, everything they do is audit trail, just like a human would do. So that is clearly available as part of the process, where you are able to see how the digital expert, works in collaboration with the human.
Okay, thank you for that. And the follow-up to the previous one who asked about the projects beyond BFSI sector, what are the likely ticket sizes in those? Is it similar to mid-tier bank kind of deals, or is it smaller?
As of now, we are saying as a platform, it can go out. We have to look at with partners how the deals will work out, how the consulting company, how the SI companies will take this platform to the non-BFSI sector. It's still to be valued. But for a large non-BFSI client, the deal value will not be different because its pricing is based on number of cores being consumed for the platform. So core consumed by bank and core consumed by non-bank should be similar.
Okay. So when you say system integrators, like as on Q1, how many SI partners are already selling this Purple Fabric platform? What share of this year's PF revenue will come through them?
It's too early to tell you the numbers. We engage more than 5 SIs working on it right now, and it's increasing.
Okay, sir. And my last question is, out of 11,300 crore funnel that looks very impressive, what kind of win rates and sales cycles are you modeling to reach this 800 crore quarterly rate?
How much? 800 crore quarterly run rate. Yeah, 800 crore. That's a good point you raised. It takes every 4 quarters we increase 100 crores. So now we have reached 700 crores. 800 crore in next 2-3 quarters we should reach 800 crore.
Okay, sir. Thank you.
Thanks, Srinivasu. Next, we have Samir Dosani from ICICI Group. Samir Dosani.
Yeah. Thanks for the opportunity. Basically, how to think about your acceptability of products, especially eMAG.ai products which are AI powered in the US, in the regulated markets like US, Europe. So any thoughts on that?
So what's the question?
Basically, how to think about acceptability of AI powered products, because there is a lot of security concerns in regulated markets, especially industries like banks, which is very regulated. So any thoughts around how is it getting more and more accepted? Is there some security concern which is impacting you?
No, I think every bank in US is using AI for some reason or the other. So it's very well accepted right now. It's a question of what kind of use case they are using. Some of them are using for call center. Some of them are using for some operational processes. So most of the banks are using it. The question is whether that initiative is scalable or not. Is it a platform based or particular use case based? What Intellect is offering is a platform based scalable operation within the enterprise where every employee can use the same platform and every manager can build their own agent and experts to deliver better value in operational process and reimagine the process. So that's our differentiation we are doing. But acceptance of AI in advanced market is already there. Everybody has put the processes in place.
Okay, thanks.
Thanks, Samir. Next, we have Pravesh Puchar from Furlan Capital. Pravesh.
Hi, thank you for taking my question. I just want to understand if you could, bring together what you talk about the experts rather than the agents into sort of the procurement product that you're selling to some of the non-BFSI customers. Thank you.
Yeah, so in procurement area, there are a lot of digital experts which are there in the area of vendor management, vendor qualification, vendor due diligence. We have experts which are there. The price parity agents are there, and some of the documentation which is required for procurement in terms of tender or RFPs, which is a large RFP analysis which is there. We have a digital experts in that area in procurement space.
Extraction, comparisons, everything are done through digital agents for procurement.
And how is the knowledge garden created for these kind of use cases?
Knowledge garden is about the policies of the company, all the process of the company. So whenever the comparison is done, knowledge garden is for saying all the policies, processes, best practices, customer knowledge garden, talent knowledge garden is a part of the enterprise knowledge garden. So it consists of product knowledge garden, talent knowledge garden, customer knowledge garden, policies and process knowledge garden. And whenever you are writing any use case, you need to say that whether we are complying to the policies what company has for procurement or for any other action, whether it's a human related policies of employee. Knowledge garden is a baseline from where all the knowledge emerges.
And should we think about the value creation target in the non-BFSI, this procurement scenario as well at that 4 to 5x level that you talk about, or is it different in this scenario?
What is 4 to 5x? Sorry.
Like the cost savings that you can have versus the traditional method that they might be using for doing this process.
It will be 20%. I think the savings as of now is not fully quantified. First of all, its effectiveness, which is more counted in our customer when we're talking about. It's like GEM, the phase 1 of GEM, we identified the transparency and speed at which you can do the procurement. At stage 2, you start looking at the cost saves, which can be in the range of 8 to 15% cost save from an absolute procurement price. But that comes in the phase 2. Phase 1 is efficacy and transparency.
Understood. Thank you and all the best.
Okay.
Thank you. Two are there. I think Puranik is hand down again. Okay. There is one repeat is there in case you want to take it for Sushovan again. Puranik was there, but I think it's left.
Just take 22 of them, yeah.
Okay. Puranik ji, you are there? Puranik ji, you are there? No, I think they put down his hand. Looks like. Then Sushovan is again there. Sushovan Naik from Anand Rathi.
Just complete it and then close it, yeah.
Okay. Sushovan, please unmute yourself.
I hope my voice is audible.
Yeah.
Sir, just one question, sir, on the Palantir thing that you had mentioned. So Palantir, as you mentioned, was first into US defense, got into enterprise AI, and then gradually it's getting into BFSI. While the way you are going or evolving is we have been very, very strong in BFSI and you are gradually moving towards the enterprise. In the process, enterprise AI is what I mean. So, which is non-BFSI. So in the process of this, do you believe or do you envisage that Palantir may, cannibalize into you? And you obviously did mention that Palantir being so big, it will be very difficult for you to cannibalize into Palantir, right? So just wanted to get your thoughts on this evolution as such.
What is the exact question? Whether it will be difficult competition to Palantir? Obviously, will be.
No, so the other way around is what I was basically referring to. Palantir getting into the BFSI part of the AI business, right? Because they are starting to get into that. Is what was
market is too big. Shobhan, we are not looking 100% market share. We are looking 10% market share. Good enough for us.
Okay.
We can coexist. 3-player market can coexist. 3-player market is a very good market to coexist where we can compete, win, and fight it out. Remaining in a top 3 in AI enterprise space is a great celebration for Intellect.
Sure, sir. Thank you. Answers the question.
Okay. Thanks, Shobhan. So,
Thank you.
I think Puranik ji has left. With the last one more is there, Arun. Tushar
Thank
Verma
you.
from Big Shot. Can I take it?
Okay.
Yeah. Last one. Tushar Verma from Big Shot Investment. Tushar, are you there?
Hello, sir. Am I audible?
Yeah.
Yeah. Please go on.
For the opportunity. I just need one clarity on your guidance. Like you said, the AI-based revenue by end of this year will be around 200 crore. So
That's
is
right.
this from this new AI Purple Fabric only, or it will include some other AI revenue as well? And is this 100 is for the whole year, or it will be a per quarter figure?
No, it's a whole year. Everything is Purple Fabric. Every AI is Purple Fabric. There's no other thing called AI.
Okay, so thank you, sir.
Okay. Thank you.
Thank you, everyone.
Okay. Thank you, Tushar. Harun, with this, can we close it?
Yeah, we just close it.
Yeah. Thank you, everybody, for joining us today. In case you have any other questions, please write to us and you'll be replied on the same. Thank you.